Hey everyone, hopefully you're killing it in the markets and absolutely having fun doing it. My name's Andy, my channel is Finding Value, and what I'm going to focus on today, since I know you guys are all about inflation, deflation, tying this stuff all together, I'm going to go over Japan. Everyone refers to Japan as in Japan has had very low rates of inflation or even deflation over time. And I think it's an unfair comparison to compare the United States to Japan at this current moment. I do think it's a better comparison maybe 10 years from now when the millennials work their way through their home buying years and we get to people who are maybe, let's say, in their mid-20s right now. Then our demographics will decline and put pressure on real estate prices and housing starts. So my thesis, and I'm going to defend this thesis using Japan, is that you have a yearly average of, we'll call it a yearly average demand for new homes being built. Whenever you go over that yearly average and you go above it, it's called an expansion phase. That expansion phase requires new loans out of the commercial banking system to go against new homes, new assets, which is inflationary. In a fractional reserve banking system, the loaning of money from commercial banks into the system is inflationary if you are putting it into the system at ever greater quantities. And the only way that you can get this type of inflation, if the majority of money is created from fractional reserve banking, in our case, it's 99% of our money is created through fractional reserve banking. 60% of loaning that comes from commercial banks is through residential real estate. Therefore, inflation comes through the banking system against residential real estate because that's the majority of the loaning. So the thesis here, I'm going to test it in Japan's market. So I'm going to jump in here. I'm going to talk about the housing starts of Japan from 1951 to 2019. And then I'm going to show you the inflation rates, and we are going to tie this together. I am going to show you why I think that housing starts is inflationary. I've already tied it together in multiple countries for this. I'm just doing this for you so you guys can gain the confidence in that thesis. So let's look into it. You're going to lose me, and I'm going to make this a large chart here. So this is the housing starts across Japan from 51 to 2019. These are the annual housing starts. On the left, this is your time in the x-axis. You can see that since 1973, this one is 73 if you run it down, 73. And remember, there's a year or two delay in inflation behind the housing starts. So we've been in a terminal decline which matches the demographics of housing starts over Japan. We had a massive run up from 51 to 71. So what I am proposing is if we were to look at an inflation area, that we would see inflation from 51 through 73, we would see a decline roughly around 73 down to 75-ish, 76. We are going to see a little blip higher in the late 70s to 1980. We're going to see this same curve be developed in inflation. Here is your inflation rate numbers. We had a massive move higher all the way to 74. Hey, look, it matches exactly with 73, delayed 1 year. Then I said late 70s to 1980. Oh, look, late 70s to 1980, we get a blip. It blips higher. We're still coming down because we are in a downtrend. The housing starts are becoming less and less. It comes up a little bit more in the late 80s, 1990. Late 80s, 1990, it comes back up. We come back down. We have another increase, 98-ish. Let me guess, 98, 99, 1 year delay, somewhere in here. We have that one little blip. Then we come back down. And we should be coming down and going sideways around zero. So the inflation rate is linked to the housing starts, is my thesis, because of fractional reserve lending. This was probably pent up. I don't know if it was something to do with being off the gold standard for the US dollar and how all these currencies are linked to that. But this is what it looks like. So it holds up pretty well even in that. And what I'm proposing is that the driver of inflation comes from real estate, residential land values. Our biggest crash in history in the United States had a housing boom in the mid-1920s. What happened in 1929? It crashed out. It's because you lost the housing market. The housing market was very strong in the mid-1920s, and then it crashed. I think it was in, the exact date, 26 or 27 is probably when it crashed, and then a few years later, the driver of that inflation came down, and they had a massive deflation and a sell-off in the stock market. What I'm proposing today is that we are going into an expansionary phase in the United States. It's going to be inflationary. Inflation is going to raise interest rates. It's going to rotate money around. And therefore, commodities are the spot to be, and precious metals. I wanted to bring this up. I wanted to show you another example of housing starts and how it ties to inflation for Japan, just as another example. I've heard other things that Japan was deflationary because of the debt that they took on and they couldn't repay the debt. I think it's just demographics driven. And then the debt, obviously, if you're continuing to expand and you have a smaller demographic, that it's going to be unsustainable at some point. So I could see the demographic driven argument being completely legit. So that's what I have for today. Hopefully you get a little bit more information on this and it gets you a little bit more comfortable on where we are in our real estate cycle and the ramifications of being in an expansion phase of real estate and possibly where you should be investing based off the channel's thesis. Thanks for listening. Give me a thumbs up. Subscribe to the channel if you haven't subscribed yet. And see you next time. This is Finding Value.